All right, what's going on, everybody? Thanks for joining in here on Christmas Eve. Just apologies in advance. I'm a little clogged up right now, so great timing, I know, but I figured I wasn't going to be able to do this Monday night, so I would do a little bit of a recap, or not so much a recap, but I guess a look ahead into next week and how we're going to close out this year. I'm going to do some giveaways throughout. So if you have any names specifically that you want to take a look at, feel free to just pop into either the comments of this live stream here on Twitter or over on YouTube. It's live on both. So what's going on, Rain? How you doing, man? So anyways, just in advance, I want to just preface everything that I'm going to say with this. To be completely honest, I really don't have much interest in next week. Reason being that we have no high impact data drivers whatsoever next week, right? So what I mean by that is there is no pre-market news. There's nothing noteworthy that could potentially give us a little bit of a kick to get going. So with that being said, and going into the end of the year, obviously a lot of people are off of work and all of that stuff. To me, it is a great time for the algorithms to play ping pong and take a lot of people's money. So I'm likely not going to be trading much on the smaller time frame. But with that said, I could still have somewhat of a game plan to lead us into the following week. And also, a lot of the trades that I've been looking at have been on the higher time frame. So to watch them digest is also something that I will be keying in on as well. So, trying to fight the urge going into the end of the year. To me, without any data like that, it's going to be difficult for us to get any, sustained move, if you will. I feel like there's just going to be algo flipping, taking liquidity on both sides, and ultimately leading to a lot of frustration from traders. So, but as always, I'll start off this week, kick it off with NASDAQ, and with NASDAQ here, you'll see we're on the weekly time frame. So where we rejected, pretty much completely erased that Wednesday drawdown that we had, that big knife that came Wednesday afternoon. Was it justifiable? Yes. But obviously a move like that, it is very hard to anticipate that it's going to come down with that much speed. Where there's signs there, I actually did a little video where I showed that, on the hourly chart, there was no, barely any imbalances that were formed as a result. So with, really with that said, we'll just move on here into other names. Let me fix this. I don't know what's going on here with the screen share. Let me just do this. Hold on. Sorry. We're going to remove this completely. Stop that screen. Sorry, that was weird. I don't know why that happened. Still clicking around, learning how to use this thing. So let's see. Okay, cool. So rejection out of a weekly bearish for value gap. This one dates all the way back to January of 2022, right? We got right up to the 50% mark, and from that point, we rejected to start. So to me, I'm anticipating, whether it's next week, whether it's the start of the, week following that, where we do get somewhat of a retracement, take out the relative equal lows, and I'll show you where those are here on the hourly time frame. Whoops, I have it on the smaller time frame here. Here it is. Okay, so if we go down and we see where we actually bounced on Wednesday afternoon, we did not quite take out that liquidity. So by not doing so, to me, that leads to relative equal lows. And when we get relative equal lows, I think a lot of people get fooled by the concept of a double bottom. And I think that can be dangerous, because if that second low isn't lower than the first, we don't actually take liquidity in that, circumstance. So this entire pop, this was a double down from somebody who longed the initial low back at 16,756. That dates back to it's loading up here, December 15th. So as a result of that, that's double the pool of liquidity there. I think that could be the move to kind of set us back up for the next leg higher, but I don't anticipate that happening before us going down into this weekly imbalance here. So dwindling down into here, taking out those relative equal lows, and from that point, making our next move higher. Ultimately, the ultimate destination for me is 17,700 on NASDAQ. SPY, I'll pull up SPY right here. Hold on one sec. So here's SPY. And I just recently posted this morning, actually, on what do you see from SPY? And again, to me, the ultimate destination here is also that high. It looks a little different, of course, than what Nasdaq would, but that high here on SPY is 479.98. That's that all-time high. So, um, you know. I really don't anticipate that happening next week, to be honest. I think this year will paint an inside year, meaning that we don't trade um, above the high or below the low of the previous. And those will typically lead to pretty explosive moves, which I am anticipating a very interesting 2024 between the election that comes up in November. I know it's far away, but they start that campaign trail very early. And I think there's a high potential for a lot of stuff to kind of come in the mix and make next year pretty erratic. So um, as long as a range is pretty big, that's fine with me. As long as we don't make a double inside year and chop inside this yearly candle, I'm cool with it. And that range should be pretty big. And for those of you who are trading, I think it could be a very fun year. So um, but anyways, those are just Nasdaq and SPY really quickly. Want to slide over here to DXY, or the dollar. To me, the best indicator. Oh, what's up, Seeker? Merry Christmas Eve to you too, my man. So let's just take a look at DXY. We'll load it up here in a second. But again, if you guys have any that you want to look at specifically, shoot them down. I did chart like 40 names. And they're going to be like, I scheduled them all. I'm not going to be posting them tomorrow, but just gradually coming out over the next 2 days. So I think today's start at like 4 o'clock. I got a couple quizzes until then. But as we load up dollar, let's see who else we got in here right now. Um, okay, cool. So here's what I have on dollar. I anticipate a little bit of a bounce on dollar, which to me would be more than enough to drive indices, specifically NASDAQ and ES, down into their weekly bullish fair value gap. And, upon the reach into this bearish fair value gap here on dollar, I would expect it to get up into here and then slowly start its descent back down to 99.57, which would create my model. It would complete it, I should say, and that would be from those highs at 114.77, which is September of 2022, down to the low of July of this year. We did get our retracement back to 50%, which is right here, and since then we've melted down. So my model would complete on dollar, and from that point, that's when I would need more information in terms of, okay, are we going to make an imbalance down through 99.57? If that were to be the case, then I would expect market to continue higher, dollar to continue lower. But if we were to sweep that liquidity down there at 99.57, from that point, liquidity sweep and a move higher, specifically an imbalance higher, I wouldn't be all that shocked if dollar starts to run and then the indices start to pull back early into next year. So that's just I guess forecasting what I would expect that could potentially happen as a result of us sweeping that low at 99. I have it 81 here. Whoops, I guess my little dot here is not perfectly precise, but that's okay. Just general direction. But again, dollar, excellent indicator. I have a video on how I use it in the on my YouTube. But with dollar obviously rejecting quite hard over the last couple of weeks, you notice we've had a slow grind higher. But now the difference is, getting down to that final point of sell side liquidity here. Um, Following this rejection, it could happen actually pretty fast. So maybe early next year is when we would see that move that really separated, the indices, got them up over those all-time highs. And then from there, again, it's just, kind of a waiting game. So, um, but here's just a few more that I wanted to take a look at. Apple, and I got to be honest, Apple's not all that enticing to me right now. It completed my model last week. This week opened up with a bearish volume imbalance down, which is AKA gap down. So you'll notice if you look at this candle here, this was the close of the previous week, and here was our open, right? So we did gap down. That is an imbalance to the downside. So is it time for Apple to take a breather? Very possible. There's a lot of names who actually did complete my model. And, at this point, it's kind of like, okay, now I just need that a little bit of additional information before considering what could potentially happen next. So this is what I have on Apple. So if Apple were to pull back 182.65, that would be a bullish breaker right here. So a low, high, lower low, a break above that high candle that creates your bullish breaker, and we can view that area as support moving forward. It would also be in discount of a bullish price run. So why is it a bullish price run? From this low to this high, we took out that high right here. So to me, that is a bullish market structure shift. We were bullish previously, leading up to the completion of my model, but we shifted, set a new range, and that's kind of what I'm waiting for here. That imbalance down, that typically would tell me that we're going to retrace back down into discount. But the fact that we have not yet gotten to that ultimate target on Nasdaq, do I expect anything crazy on Apple? Not necessarily, but potentially chop around and have some of these other names kind of carry the weight. That's something that I'm anticipating. So that's kind of what I have on Apple there. What's your SPX price target on next week? Thanks for the question there, Yankees 27. Let's go Mets. But I really don't have one. I think next week's going to be garbage, to be completely honest with you. And the reason I say that, I'm not sure if you were here in the beginning, but there's no data at all next week, right? Or no high impact news that we could worry about to actually give us some movement in price. So I'm kind of expecting it to just be like a choppy algo fest where we're just kind of sweeping lows in between a very tight range, lows and highs, I should say. But overall, I am anticipating a little bit of a drift lower before getting into a weekly bullish imbalance and then going back up for those highs. So hopefully that helped you there. But yeah, so but Tesla, another one. Again, nothing has changed. I know we've been kind of range bound over the last couple of weeks, but nothing, and there's been no shift in this bullish structure on Tesla. My model would complete all the way at 299, so quite a ways away right now. We also have relative equal highs. I believe that's at like 314, if I'm not mistaken. Let me just pull this over. So you see these equal highs right here, right? Or relative equal highs, right? Very close. So at this point, obviously, with hindsight, what had to have happened here? They had to have driven price down, right? Whoever can move the market, whoever went short at this point, they did not want to see their stops get triggered up here. And it was a double down. And from that double down, it took off. So to me, there's double the amount of liquidity up here. The market needs liquidity to move. And without that, then, really, it's just going to be a complete and utter chop fest. So that's why ultimately my model would complete at 299.29, I think the number is. But those relative equal highs are also something of interest there. Upstart as well. So I've been in Upstart for about 2 weeks now, and this was one that was brought up on one of these calls. Actually, it was a pretty good one. So far so good on Upstart. I would want it to close above this orange dotted line here. It's going to come up here in a second, but and I'll explain why that level is something of interest to me. Hold on, it's loading up right now. Let me just click over. Okay, come on, come on, come on. Let me see if I can just add it right now so it doesn't have to wait. I'm also getting a new computer, so that's great. I got to like a legit PC type. Well, this is what I'm looking at right here. It's going to load up in a second, but this orange dotted line right here, that is the CE consequential encroachment of this bearish imbalance right here, or midpoint, right? It's the middle of the range. To me, for price to take that next leg higher, we're going to need a weekly close above that level, and that's 47.71. Above there, my model completes at 72.58, and that's why it was so interesting to me when I got into it down here, right? I wanted to see a pretty substantial move, and so far so good. Towards the end of the week, it was a little bit of a drag, but not all that worried. I would prefer to continue moving higher without any retracement down into here, but it is possible that we retrace back down into this bullish imbalance right here before taking our next leg up. But to me, yeah, I'm feeling pretty good about upstart still, even despite the end of the week little pullback there. So um, what else? Let's see. Kind of running through these real quick just because I got to go somewhere in a little bit. Uh, let's see. All right, NVDA is another one. Again, if you guys have any that you want to take a look at, feel free. 2024, the year Mando takes over YouTube. Yeah, I think it'll help if I have a better computer. I mean, I never ran into any problems with my MacBook, so I was like, okay, I don't really need it. I have a side monitor. I got, uh, but I think I'm just gonna get a legitimate heavy duty, maybe even like a gaming computer or something like that. Not that I game all that much, but I think it'll be nice and it'll be much quicker and seamless of a transition there. So, but you notice here, it just takes a little too long. I don't like that. It never did that in the past. It might just be at the end of its rope here. But I also don't have problems with it at all when I'm not streaming. So I guess that plays a role. But anyways, here's the video. Another one. I think this one can actually give us that jump and kind of lead the way here. So if we look, here's our market structure shift or the setup of my model from low to high. Took out these highs with that price run. To me, that is a bullish trend or a bullish market structure. We got our retracement down, but here was the interesting part, and this is what kind of threw me in for a wrench a little bit. It did perfectly respect our imbalance right here, or weekly gap higher, right? Perfect. No one's debating that. But the fact that it didn't get into 50% or discount of the range, it left me uneasy. I wasn't all that sure. But from this point, after creating this imbalance here, could price retrace back down into this imbalance and then take off for that 505. That's something that I'm anticipating. So at that point, the range still would not be set. So if we were to make a new high, my range would have to move, wherever that new high was, right? And that would be the fib setter, I guess you could say. And then at that point, who knows? I mean, I'm forecasting even more in the future. But if we were to take out that high and move higher, that low here, that is pretty enticing for what could set up to be a bearish breaker, which is a high, low, higher high. And then upon breaking that, this candle would act as somewhat of a resistance level. So that's something that I'm thinking about maybe early into next year, possibly happening. So, I try to anticipate what could potentially happen next, not just what I'm focused on right now. But that would be NVIDIA. There's so many here. If you guys have any that you want to look at, take a look. But Soul Vibes, shoot me a message on Twitter. I got some for you. Thanks for popping in here today, man. Oh, cool. MU. Okay, so I definitely didn't chart this one this week, but we can look at it together. So compound interest, you got MU. Let me pop on over here and we'll pull it up. I have it on my list. I just didn't chart it at all. I know it had earnings last week. It was pretty a pretty big pop. Let's take a look. I'm just loading up right now. While we wait, let's see what else we got here. Here we go. Look at that candle. Dang. Pretty strong. I'm also interested in one thing. Okay. So we're actually running into a untouched bearish imbalance right here at 88.45. You see it by this gap, right? That gap down, that should act as resistance moving forward. I want to take a look at this and I'm just curious how my model would have played out in this situation. Let's go from this low to that high. Why? Because we took out this recent high with that move. So ready, low. Oh, I already have it on. Whoops. Okay, hold on. Oh, this is the overarching trend. So let me just get rid of this one really. Oh no, it's not. Hold on. Let me do this. There it is. Dang, look at that. You can't make that up. So my model completed here on Micron. So you have your low to your high, your retracement back down into discount. Remember, anything below 50% is discount of the range. Let's just see if we have a bullish imbalance here just for fun. Here it is. Bingo. Got into the discount bullish imbalance and took off. Look at that. That's sweet. So that's a really cool, really nice move there. So yeah, that's kind of what we're chilling on right there with MU. Actually, oh, it happened before. It happened the week prior. Sorry, that was annoying. Um, but here's your little retracement down. There's the, when you sweep the high, that would be the completion of my model. So yeah, it worked out great. And look what happened. Took out buy side liquidity, 86.24. We actually closed above it. So really what I would be looking for next week on Micron, not that, again, I think it's going to be a relatively bad week overall, but and I'm not saying going down. I just think price action on the smaller time frame is going to be a little sloppy. But basically what I would want to see on Micron is I just wouldn't want it to close below this 80. Well, what's the high of this candle? 82.99. Reason for that is if we were to close up next week, we can create a bullish imbalance above buy side liquidity. That would be the goal, right? So if you come back down here and price retraces back down to 80, 82.99, you do not create that bullish imbalance. So at that point, I wouldn't really like it all that much. But that would be really the setup going into next week for me. Since we did complete my model here, the next order of action for me would be just to do this, right? What was the price run that took out these highs here? And it was this low to that high. Now, do we have a bullish imbalance and discount? We do. We have multiple actually. But if you're looking for the continuation move, again, you want this to create that bullish imbalance on the weekly. But if it's not to do so, then you can just hold off. You have this bullish imbalance right here down in discount. I know it's far away. It could take a lot of time to get down there. And that's the difficult part is, of course, the patience. I know everybody runs into that at one time or another, but that would be ultimately what I'd be looking at. So I got a double bottom on Upstart and a target of 50.59 next week, possibly. So Croatian Sensation said that. Thanks for that input there. Yeah, I still like Upstart. It's really not going to change for me at all unless it gets a close below. I'll show you. The contracts that I have are up quite a bit still. I didn't take any off or anything yet. I'm just going to kind of let it play out. I have until mid-February on those, so I'm really not too worried at all. But hold on, I'm just waiting for this to load up. Sorry, it's a pain. This computer's on its last legs here. It's coming. It's coming. Let me plug in. Where is this thing here? Oh, this fan is. We'll crank it. I hear the fan blowing hard on this. Here, let me crank this up right now. There we go. All right, let's go. Let's load up. I don't want to shut it down just yet. So let's see. What else? Anybody else have any other names they want to take a look at? I wanted to keep it brief and just do it quickly. SoFi is another one. SoFi is sweet. I just obviously need to load up. Let me close some of these extra tabs here. See if that helps out a little bit. So waiting. I know. It's terrible. But what else? Yeah, SoFi is another one. I like SoFi for potential run to 1170. That would be the swing high and buy side liquidity on that name. So something that I am absolutely looking at. So let me just click on over here. Somebody just commented this to me. Hold on. Nothing new. Okay. All right. Are we kidding here? We're really not going to load up. Brutal. Can't hang anymore on this thing. There it is, finally. Sorry about that. Took forever. Okay, let me remove that. Yep, so this swing high right here on SoFi is what I'd be looking at. And that's at 1170. So from this low to that high Y, we took out multiple highs in the process and on that price run higher. Here's your retracement back to discount. Do you have a bullish imbalance in discount? You do. You have one here. Bingo. And so far, so good. We're taking off towards that 1170. So that would complete my model at that point. Still about $2 away. And that's kind of something that I'm anticipating happening on SoFi. I know that's a name that's been getting a lot of love recently. So, oh, you want me to zoom in, Verona? Sure. I'll zoom in some more here. I could also just do this, honestly. Let me just go here. That should be a little better, yeah. So that's what I got on SoFi. I'll zoom it more. So, so yeah, really, this is like a perfect rendition of my model, where it's your low to your high, take out multiple highs in the process, creating a bullish price run. There's your retracement down lower into discount. Here's your imbalance and discount, and so far so good. So that's what I have on SoFi. But oh, thanks there, Tran. Merry Christmas to you as well, sir. Neo, yeah, Neo trolled me a little bit. Let me pull this one up. Hopefully it doesn't take an hour and a half to load, but here's Neo. Ready? Here. So Neo, I wanted it to sweep the low at $7. We do have relative equal lows down there, so that's why I didn't feel all that comfortable about scooping something up. But the move speaks for itself. Obviously, we are up quite a bit since then. Yeah, so here's Neo. And again, while we did take out this higher time frame. Ready? Bingo, right here. You see this? The fact that we didn't take that out didn't make me feel all that great about the long. Obviously, we gapped up. We started running higher and everything like that. But if you go back a couple weeks ago, if you were to type in money sign NIO and then just my at MANDOTRADING, you would see I just said that I wanted it to sweep that low at 7 and then get that run higher. It was around here. Didn't quite get it. We were so close and took off. The reason why I say I wanted that to be swept is because I wanted that liquidity to be purged for a run higher. But Neo does have a couple levels that it's got to work on, and these have been untouched. So, really, while we're in them or approaching them, it might be a little slower. The white areas is where price can kind of take off a little bit and move quickly without any real resistance in the way. That's kind of just the way that I look at these levels. So that's what I got on Neo there. I know that's another one that a lot of people are talking about. So let's see, RKLB. We can look at that one. Let's look at Baba first because I have that charted already. I haven't traded Rocket Lab in a while, but here we go. It's loading up a little faster. Yeah, there you go. So here's an example of why I like Baba more than I would have liked Neo, and it was because we did take out that higher time frame liquidity. My annotations are going to pop up here in a second, but if we're just to zoom out a little bit, I mean, look where we bounced. It's going to come up when it loads, but whoops. Here, see this? Bullish volume imbalance or weekly gap. Look where we held. Bullish volume imbalance, weekly gap. So really, we're working on a bearish imbalance right here on Baba up to 76.70. But from that point, you got one more up here at 81.77. And then if you're to take out this high at 87.64, it's good to just shut down. But if you were to take off that 87.64, at that point, you would have a bullish market structure shift. And if that were to happen, then even if you were to look for a retracement prior to the next leg higher, but that would set up a bullish breaker. So you're low, high, lower low, and then taking out that level. This wick high would be your breaker candle, and you would anticipate price holding that before making its move higher. Ultimately, 105, that buy side liquidity right there is nice. But again, weekly time frame, weekly outlook, this could take a while. And I personally think looking at the higher time frame to kind of map your bias and determine which direction you think it's going is very helpful, even while trading on the smaller time frame. And I have videos on that as well for anybody who wants a more in-depth little analysis on that. But okay, let's look at RKLB. I'm running through these quicker today just because I know it's Christmas Eve and everything. So, and I got to head out here in a few, but I wanted to pop on. Let's see who in the chat right now. Hey, compound interest. Thanks for being here. I see you in here all the time. Shoot me a message on Twitter. I got something for you if you want it. All right, here's Rocket Lab. We're loading up. Oh yeah, Rocket Lab was sweet. It had to be a couple months ago at this point, but that was a nice trade that had a big time run on there. Who brought this up? Oh, that was you. Compound interest. Dang, good eye. Yeah. So the way that I would look at this, check it from low to high. Took out these highs with that price run. Here's your discount retracement. With that discount retracement, where do we bounce? Right here. I definitely don't have this charted either, by the way, so, or up to date charted, I should say. Let me get that rectangle. Check that. Come on, can't make it up. There it is. Boom. Now you're dealing with one bearish imbalance that I think can cause problems. Other than that, I think you're onto something. Whereas here it is, good. It actually had a nice move last week as well. So here is your low to high. Why am I using this green candle, not this one? I'm just looking at the start of the immediate price run higher, right? This box right here is probably an older daily level that I have on it. Same thing here. I just noticed those right off the top of the bat. So, and you can see there's your rejection after getting to that level. But the way that I look at this here, yeah, these are all old levels. I haven't looked at this name in a long time. Let me just get rid of the daily. We'll keep it clean with the weekly. But yeah, got our discount retracement. Now this is what we're dealing with. This is the one that can give us problems. So really, it's up until about what 606. I think this level is here. Yeah, right, 606. That could be a problem. This imbalance right here from that wick to this wick here, this empty space right here, right? That again, while I don't anticipate it giving us all that much problems because we have already tested it and we got to 50%. Isn't that interesting? And this is what I mean when I talked about Upstart before, where I wanted to close on the weekly above that midpoint of that bearish imbalance. To me, if we get a close above that the midpoint of the bearish imbalance, that's showing me some urgency to move up and out and fill it up. And then when you fill it up, you get something called the balanced price range. And if you have a balanced price range, fair game, right? So while ultimately I would favor the upside on RKLB, I think a lot of these smaller names are going to continue to move higher, specifically Russell names. I don't know if Raga Labs and Russell or whatever, but just smaller names in general. I think they are catching a bid right now. I mean, look, you do have two levels to beat, but really a weekly close above that 681.8 should be or it would be something that to me would come relatively quickly. This rejection here, you might say, oh, well, it didn't get up into your imbalance right here. This is a daily level, but if you were to look at the weekly, and this is something that I've shown you guys quite a bit, but what kind of setup is this right here, where you have an up close candle followed by a down close candle that closes below the open of the previous? That's a bearish order block, right? So you have a bearish order block there that was a cause for rejection, but you also have that bearish volume imbalance. Yes, the wick gave you the heart attack, but no body candle overlaid that level. So to me, it's still valid, right? So that's just something that I look at as well on names like this. So loading up Neo, selling covered calls all year. The premiums are great and huge upside. Yeah, no, I don't hate that idea, their equation. It's just, in terms of like a feel good trade for me, I like it, try to meet all the criteria. There's so many names out there that I don't really, I don't need to trade one specifically. Picklewick, yeah, no worries, man. Thanks for joining. I see you in here too, Ivan. Merry Christmas to you as well, sir. Here's one that is beat to death and no one likes, but I timed the bottom and it's looking good. WBA. We could look at WBA, and I am Rio. Merry Christmas. Merry Christmas to you too, sir. Thanks for popping on in. And Deepak. We could look at DE. So WBA, then DE for sure. All right, so let's go WBA Walgreens. Oh, all right, it's loading up now. All right, here we go. If I remember correctly, I haven't really looked at this one all that much, but Walgreens has cheaper premiums, right? So, ooh, okay, nice pickup there. Yeah, you created a bullish imbalance here as well. Believe it or not, you actually created a little bit of a sloppy one, but a bullish breaker. So if you're low, high, lower low, break above this high, you would anticipate that candle being viewed at as a support level moving forward. I'm curious to see when the last time we were down here, obviously, but I also want to see if we swept higher time frame liquidity at any point that would justify us moving the way that we did. Because again, every move that occurs on the chart, you really want it to be justifiable, especially if you're learning to trade the way that I trade. That's something that I preach. It's there's an answer for everything on the chart. You just got to do your DD and find it. Oftentimes it is easy, and you know on the weekly time frame it'll kind of give you the framework as to why something may or may not have bounced. But here's the scary part. I have no idea when the last time Walgreens was back here. I mean, we can zoom out forever. Let's see if we could find something, but it's gonna take a second, obviously. But come on. Oh yeah, we looked at Walgreens a couple weeks ago, I think. All right, I just need more info. Oh yeah, look at this. I knew there was higher time frame liquidity. Okay, so it's loading up now. But if you see, we did this in the past. 21.39 was the level. That was a higher time frame swing low. We swept that, and since we've taken off. So when you take out higher time frame liquidity, oftentimes that does lead to reversals. And so far, so good. You're seeing it here, and there's your. These are relative equal lows, by the way, sweeping relative equal lows, and from that point, taking off. So far, so good. Now, where could we potentially run into some issue, I guess you could say, and we're just about there. This is a bearish imbalance right here. So from, I'll draw them out, whatever it is, I'll do it quickly. Whoops, rectangle, good. Okay, so here's your boom. There it is. Check that. Crazy. Look where the candle closed, just a tick above that 50% mark. That's pretty encouraging to me. Here's another, and that so the fact that it closed there, and like I'm saying, it is encouraging to me. That doesn't necessarily mean that it doesn't need to pull back. Just start off the week and go. You can't go lower, or it's done. To me, I know it's a pretty wide range, but it seems like you were in for quite some time now. I would just look towards the breaker. If it goes below the breaker at 21.90, then it's kind of a dud to me. But I don't really anticipate that happening. But you have another bearish imbalance right here. I have the range set on a much higher time frame. If you want to really crunch it and look tight like this, that's what it would look like. To me, in this area right up here in this golden pocket, 62 to 79%, this bearish imbalance here, that's the deciding factor. If you are to break above this and clear that 31.32, then you can get a serious reversal. But if price gets sticky, rejects from that point, then ultimately my target would be the lows again. So it's a nice trade, though. You really did catch it off the bottoms, but that's why I use those liquidity levels. So you might see them as pink, like this pinkish color. If it's a pinkish color, I also look at that on a lower time frame, and that's how I just distinguish them on my lower time frame charts. If I have it in blue, it's still liquidity. It's just typically on like a NASDAQ chart, I'll have the blue being the internal range liquidity, and then the pinkish lines, they're my external range liquidity or higher time frame liquidity that I would expect reversals at. And in that situation, I would not really use my model. So for me in this situation, I would have tried to, I would have probably never got into this one, honestly, unfortunately. I don't know how this candle painted, if it was down first, then up, or up, then down. But this honestly would have never given me a entry, because I don't just buy it off the sweep of liquidity. I need to see an imbalance form from that point. Right here, we never came back down and retested it, so I would have missed this trade, but that's okay. But direction wise, you did sweep that higher time frame liquidity. That's pretty good. And then DE was the other one. Okay, I 100% do not have this charted, but that's okay. we'll just go through. Let me just see if I have any more no indicators. Impatient trader. I do not use any. You don't need any. You can learn how to read price action, and I bet you it'll be the most enlightening thing for you. Where to start? I actually just put out a whole list of YouTube videos where I just like show it yesterday. So if you want to go back through, but there's one where it was no indicators necessary ever, and that I basically went through the entire Bitcoin chart and just showed how price action rules all, and you really don't need any indicators in order to learn how to read price. And that's why I each weekend I'll post like those longer short quizzes, because it just goes to show that really you can, if you learn how to do this properly, you don't need any of that. So okay, so far on Deer, you held a bullish order block. So this down close candle followed by an up close candle that closes above the open of the previous. So this would be viewed as our bullish order block, and I'll show you that right here. Again, every move on the chart can be justified. That is, and I do my order blocks in purple, but every move on the chart, you should be able to justify it. And if you can't, then just gotta keep working, work harder, because I don't think I'm the smartest individual on the planet, but if I can justify it all, then it's pretty good. But okay, so Deer actually had just completed my model back in July. So here's your low to high. Why am I using that range? We took out multiple sets of highs. Bingo, bingo, with that price run. Here's your retracement back down into a discount, bullish imbalance. Is there a bullish imbalance here? Yep, there's two actually. Ready? One. Boom. It should be green, but see, again, everything can be justified. There's your run, and there you go. You sweep that high right there. My model is complete. Dunzo. Okay, from that point, now we wait and see. Actually, what I really would do is just go from, okay, what was the low that started the price run that took out this high? And I would go from here to, oh no, come on, give me the fib. There it is, good. Fib low to high. Okay, check how beautifully we're holding on to that 79% retracement level. That is beautiful. Bullish order block here. You also got your wicks into this bullish volume imbalance again. That's a nice setup. So to me at this point, if you can get above this level, and of course we're looking at the weekly time frame, when you do that, kind of want a weekly close above there. But if you don't, if you don't want to wait, you could go into a lower time frame. So if you get a daily close above this weekly level at 50%, 397.78, maybe that's your incentive to look higher, because at that point my next target would be buy side liquidity right here, this little swing high, bingo, at 423.35, and also you have one more bearish imbalance to beat, and then you got 450. So that's actually a pretty good eye on that one. We just about filled this bearish imbalance too. So so for me in this situation, doesn't mean it has to be you, but the way that I trade and how I like it to meet my criteria, because I did not catch this 79% move, I would love it. It might not happen, but I would love for it to come back down into this bullish imbalance here, 382, and then blitz from there. I don't know. I keep getting this error message on the adding like an alert. So yeah, see, I keep getting this. I don't know why. On my phone it works fine, but that would be something I'd be more interested in. But that's pretty interesting setup there. Very nice. Whoops. Let's go back. So yeah, Deer. Good eye. I forget who asked me about that one. That was Deepak. Nice look, man. 1996, I think. Oh, okay. Oh, for Walt with WBA. Yeah, you got it, man. Yep. Happy holidays to you too. What else? Are there any more that I want to go through real quick? Or let me see over here. I guess one more thing I would say, just when using like these ideas. So this is what I like teach and what I've learned over time, to use these types of concepts where I don't need indicators. So like if you do look, you're gonna say, oh, you have indicators. What are you talking about? It's one that just maps out the new week open gap on my futures tickers. So there's a gap that occurs to open up the week typically, because that's the longest period of time where futures is closed. It's over, Friday from 5 p.m. to 6 p.m. Sunday. That's the longest period of time, right? So typically it'll form a gap, and it turns out that that gap is pretty sick. Actually, this week I killed 2 trades off of the new week open gap, and if you were to scroll down my timeline a little bit, you could see those. But and then the second one, it just pinpoints time. So what I mean by that is there are certain times that I personally like trading off of more. I won't show you on the weekly, but here, let me pull it over here. Here, so you'll notice, like, bingo, check that, 1:30, 9:30, 8:30, midnight. Those are all levels that I like to have on my chart. Look at that, new week open gap. So you see how, like, these are not just like made up things. Like, you can go back and back test this, and it works. So I needed that because I don't want to say I was just like kind of a wild card, but in a sense I was a little bit, where I just needed like an explanation as to why. Like, why else would this bounce here? I needed to know that. And then when you start using these concepts or these ideas, even the gap theory, when we gap, if we're gapping higher, that's showing me urgency to move higher. We can use that level of support. If we're gapping lower, using gap theory, that gap lower could turn out to be a resistance level. And it also well defines every trade that you take, right? So for example, if I were to look into taking this trade, I didn't, but if I were to take this trade, it really just lines up as, okay, entry, whether I typically on a bigger range like this would go off the midpoint of it. But if you were to take it off of, you got much better or much more risk tolerance than I do, you buy it off the high of the imbalance and cut it at the low of the candle that created the imbalance higher. Like, that's literally how I trade, whether it's on the 15-minute, whether it's on a weekly time frame, it don't matter. It's all the same to me. And that's just reading candlesticks. It has nothing to do with any RSI, MACD, any of that stuff. I think it's really misleading to a lot of people, to be honest. So that's why I don't use it. So just real quick, we'll do a couple more. Okay, Chief Poo Water. Haha. Okay, how high do you think Tilray will go? I don't know. Well, let's take a look. Another one I definitely have not charted in a really, really long time, so I apologize if I got some slop all over the place. All right, I got about this. This might be the last one here that we take a look at. So Tilray. Okay, so right off the bat, oh, dang, this is a pretty interesting one. I'm just seeing it right off the bat. So ready? First and foremost, let's go down to our low. Okay, what was the low that started the price run to take out these highs here? And it was from this low here to that high here. Here's your discount retracement, 79%, pretty good. Do we have a bullish imbalance down here that we can use as the basis for our idea? Bingo, right there. Still haven't even gotten out of it yet, which is ironic. You might say, oh, well, this would have, got me out of it. Check out what's here. Bullish volume imbalance or gap up on the weekly, right? So again, every move can be justified, and there's your run higher. Now, why do we reject here? Okay, take a look here. What is this? Wick. Oh, whoops. Wick. Body. Wick. And that's a bearish imbalance right there. So to close out the week, we ran into this bearish imbalance right here. I would still favor higher, but I really wouldn't feel all that great about it until we cleared that on a weekly time frame, 226. And then here's one more. You have your bearish imbalance right here. This one's untouched. So if we were to get up into this one, I wouldn't anticipate it creating the reversal, but I would anticipate it becoming a roadblock and kind of slowing down a little bit. Also, you have this bearish volume imbalance or gap down here. Remember, gap down showing you what? Urgency to go lower. There's your urgency to go lower. Look at the move that occurred following that. So the completion of the model would be up here at 340. And then honestly, which is crazy, beyond that, you don't have anything. You have a bearish order block right here, which again, roadblock. But ultimately, your next area of buy side liquidity is up here at 511. So why do I say that's buy side liquidity? Well, what had to have happened here for price to move the way it did? People had to short this or be selling their longs, right? So if that were the case, right, and people who have money to actually move markets, not me, unfortunately, but for those people, they're not going to go into it with a heavy position without any type of risk management to the upside, just in case. And that's where their liquidity would be resting. And if their liquidity is resting here, we know that the market needs liquidity in order to move. Without liquidity in the markets, it's pretty much a chop fest. So, and if it doesn't have enough liquidity in the meantime, and it just consolidates and chops around, it's going to take some sort of inflow in liquidity, aka money, to move the thing. Because without it, it's like a car without gasoline. If you don't have liquidity, that it's just not going to move. It's going to be dead. So, so yeah, that's I think that's all I got. So thanks everybody for popping in here. I'm glad I was able to do this really quickly. Thank you for everybody who has been in here multiple times over the last couple of weeks. This is something that I plan on doing for a while now with my live streams, and obviously I'm in the group streaming and stuff like that as well. But I think it's cool to do it on here as well, meet some new people, and um, we got a lot of good ideas that actually come from you guys, and I would never see some of these names if it weren't for you all kind of you know giving me eyes on them. So I do appreciate that. And but with that said, yep, no problem there, poo water. But anyways, that's probably it for me here. Again, thanks for joining up. I hope everybody has a nice holiday, and we'll be back at it next week. Again, might be a little slower, but we'll still be watching. So thanks again to everybody who popped in, and we'll catch y'all soon.